to see today business as usual. It's Wednesday. We are going to talk about investing your money, my money too. Let us give you a warning. There's always a risk in investing, including stock market. Here we are going to help you on how to manage your win or loss in the stock market. For that, we have our market enthusiast, Dani Rachmat, on the studio. Thank you for coming. And you can also always follow him on Instagram at Dani Rachmat. Now, we have talked about EPS and PER, were some of them. Now, there are also price to book value, debt to equity ratio, and even dividend. Now, today, let's discuss with PBV or price book value or on today's discussion. So welcome, Mas Dani, on the show again. As always, we already talked about EPS, we already talked about PER, now we talk about PBV.
PBV, yes.
Now, explain to me again, what is book value?
Book value is the value of a company.
All right.
In technical terms, book value is the difference between the total asset and the total liabilities of a company.
All right, so total assets, so we're counting like if they own the buildings, they own some kind of software,
Yes.
or they own some kind of, if like a TV shows, TV station like us, so how many programs that they have and all
Yes.
that, that's considered as asset.
Total
And
asset.
liabilities,
And
what do you put
liabilities.
on liabilities?
Liabilities is that if you have account payables to your
Right.
suppliers or maybe your counterparties, you have to pay someone to run the business and everything,
I know,
including debt to the banks.
right, I know one company that hasn't paid their debts to certain suppliers that they need to do that soon so that we can continue to shop over there.
Yeah.
But let's talk about how you calculate price to book value. Do we need to use the
Yes,
chart? All right,
of
let's
course.
do that. Let's get straight to this. So explain to me. So what is the price to book value and how we calculate that?
Yeah, price to book value is basically the price divided by the book value of the company. So how many times do you want to pay? People are willing to pay
All right.
for the stock.
All right. Price
But
book
it's-
value.
Yes. Book value, as I mentioned, is the assets
All right.
minus the
Liabilities.
liabilities.
All right.
Here, you got the book value of the company.
Okay.
But then, when comparing one company to another, you cannot directly compare the book value of company A and company B.
All right,
Because, yeah,
It depends
the
how
size
big,
difference,
how big
the size
the
and
size of
everything.
the companies and stuff like that. All right.
So you also have the number of shares, right? Sorry. So if you want to compare apple to apple between one company to others, you have to divide the book value by the number of shares available in the market.
Okay.
Only then you got the book value per shares.
Book value per shares. All right.
Yes, this is book value, this one,
All right.
divided by number of
Number
shares.
of shares.
Here you got book value per shares.
Okay.
And then when we want to talk about PBV, you divide the price,
The current price right now.
current price,
Okay.
with the book value per shares.
So the current price divided by
Yes.
numbers. Can I erase this because I need you to
Sure,
give me an
sure.
example.
Sure.
So give me an example of a company. Let's say they have an assets. Let's say $500,000 with
Okay.
liabilities with 200,000. So if I can put, so we have an asset of 500K and liabilities of 200K. Is that
Then the book
something
value,
we can work it?
yes, of course. The book value will be 300K, right? How many shares available in the market then?
Let's say 100,000.
100,000, okay.
I
think
just want to make the numbers kind of easy.
Yeah. Thank you for that. And then book value per shares will be $3 per
How do you get $3 right there?
300 divided by 100K.
Oh, okay, so
Yes.
as simple as that. So
As simple as that.
Okay, all right.
So we got $3 per share
All right.
for the book value. And then what is the price in the current market?
I don't know. Do I want to do $1.50 or do
Okay.
I? Oh, no, how
It's
about
okay.
$6?
Okay, $6 then.
I want it higher than whatever
Yeah.
the number is.
Then the PBV will be 6 divided by 3.
Okay.
You got, sorry, $2.
Oh,
for
$2
shares.
or 2 times?
Oh, 2 times. Sorry,
Okay.
sorry.
So it's
2
not
times. Yes.
So it's 2 times. So the
Two times.
PVP is actually just saying the price, the current price right now is 2 times
times
higher
of
than
this book value.
the book values. All right.
This means that people willing to buy this company at twice of these book values, its current book value.
Now explain to me, what number are we looking for? 1 or is it below 1, or what's the magic number for PVP?
As we always talk about stock market, you cannot compare it directly like that. You have to compare the companies in the same industry and then the same businesses, so that maybe 11 times book value is relatively cheaper than 25 times of book values.
Right.
PBV. So I cannot answer that directly,
Really?
but people usually say that 15 times book value is already too expensive.
All
But
right.
again, we have to see how is the company performing, how is the historical, and how is the prospect.
So what? But can you help us to understand what is the meaning if the higher the number is higher than 1? That means the price to book value is higher than whatever it's supposed to be according to the book value
Yeah.
itself. And then if it lowered, can we go to negative, or we only can see a fraction of 1?
Fraction of 1.
Okay, so always-
if it is go to negative, meaning that the equity value is negative. They have more liabilities than their assets.
Oh, so
why
if-
do you want to buy that kind of company?
So there's actually a PVP that can go negative
Yes,
if they
yes.
actually owe more money
More money than
they
they
have, that the asset that they
Yes.
already have. All right, so we're gonna compare some companies, because we did
Yeah.
milk company before. I wonder if we already have the graphic on that one, or do I need to exit on this one? So we have some graphics on some companies that we're gonna compare in the same industries,
In the same
and then we're gonna look at the PVP, the price book value, and then from there we can make our decision
Which
if
one
it's a good
yeah.
buy, or is it it's not such a great buy,
Yes,
or
yes.
or whatever it is. Now tell me, now explain this to me. You mentioned earlier that some book value, not book value, I'm sorry, the price to book value, it
Price
can
to
be
book value.
negative. What happened if actually a company, because like recently there's a company that went under, there's a bookstore, and they were listed on the IDX before, and then they went delisted. What happened to our money?
Yeah, if that is the case, I mean the company went under, and then you cannot, you will not be able to recover your money you
Okay.
invested in that kind of company, because when they went under, their book value became negative, and then they have to close down their business, meaning that you lost everything in your investment.
So
Because for stockholder, we are the last priority to be paid.
okay,
They have to pay their creditor first, so their employee first, and then their creditor, and then if they still have money, they
They
will
pay-
give
sure.
back their shares.
So again, warning, stock market is, there are risks. One of them is actually you can lose all your money if the company actually went under. So this is why we kind of need to understand the PER, the PVP, the
yeah.
EPS, because you want to know about the future of the company. Is it even have a future
Yes.
in the long run? And then how about if they decided, hey, I'm not going bankrupt. I just want to go private. I don't want to be unlisted anymore.
If that is the case, you will be very lucky if you're one of the public shareholder.
Oh, okay, so I'm lucky if
the
that
company is performing very good, and then they want to go private, and then they decided they want to go private, they will have to buy back the shares that is available in the market.
Okay.
So you can just hold on to your stocks and then say that I don't want to sell it to you unless you give me premiums for that.
Oh.
So they can. It happened before for like Aqua before.
Oh, yes.
They paid the public shareholder very expensive premium because they just want to buy back all this the available shares in the market.
All right. So one of the other things, like yesterday, I came around. Somebody told me like, oh, the price of that company is higher than certain company. I was like, how do you calculate it? A price is higher. What are we looking for? I cannot say like a company that the share only 500 rupiah compared to 1,000 is necessarily cheaper.
Yes, yes.
What number are we looking for? Is it the PER? Is it the PVP?
The easiest way is the PER. I mean, for the PER, we pay based on the earnings. How many times we want to pay based on their
whatever
earnings.
they
Whatever they make per year. And then for the book value, we pay based on the value of the company. If you produce like these clothes and your cost of production is only 1,000. The book value is 1,000.
Okay.
So will people buy for 2,000 or maybe 3,000? So many people do that, right?
If they do,
Yeah.
then that means like it's actually going like a
So
pancake.
you have to check on this, and then not only that, you can also check on the dividend, whether the 1,000 shares, 1,000 rupiah shares share more dividend compared to 500 rupiah shares.
Okay, so we have comparisons for some PVP, some example of for some milk companies that we previewed last week for the PER.
Yes.
Now we're gonna look at the PVP and then see how the PVP performs. So if we can,
That would be a great example.
right. So if we can look up some of the comparison graphics on the PVP on the comparison of Milk 1, Milk 2, and Milk 3 companies, which is coming from real companies. We're looking back from like 2018 to 2019, so we're looking back like several. Still, again, some companies going to in Indonesia, the lowest price is 50 rupiah.
50 rupiah, yes, 50 rupiah.
Can I jump in and buy those kind of stocks right away, or is there a warning on that one? So, but before we go in that one, so let's look at this one. So first, before we go to the PVP, we're gonna look at the BVPS first. So the book value
per shares.
All right. So explain this to us.
For this, let's see the 2023 number here.
The 2023.
Yes,
the 2023
this one,
numbers
the annualized. The annualized one.
So this is what we already have
for the first 3 months.
This is the first 3 months, and then this is the analyzed.
The analyzed, yeah. For this one, we can see that Milk 3 is the most the company with the highest book value.
Is that what we want? Is that what we want? We want like the highest value.
I want to buy this one. But then, let's see again how is the profitability of the company.
So for example, on this one, on the Milk 3, there's 728. It's a higher number, but according to you're more
I will buy this one. I mean, for the same goods with the same quality, the one you have to buy with 700 rupiah, and the other one is 500 rupiah.
All right, so
definitely I will buy the 500 rupiah.
All right, so let's move on to the next graphics with the PVP. So let's see here. All right, so we have this one again.
Yeah. This is interesting because previously we see that the Milk 2 actually have more book value per shares compared to Milk 1.
All right, so we see it right here. On this one, it's actually way higher. Like
way higher.
Can I say this is expensive?
Yes.
Oh, so this is
for the same company, yes.
Oh,
I mean, you have to pay 6 times of its value, while this one you only have to pay 3 times of its value.
All right, now the question is, Milk 2 has a lower PVP compared to Milk 1.
Yes.
Why is this 2.93 times PVP is more interesting to Dani Rachmat compared to Milk 2?
Because I know which are the companies.
Okay.
This one, they have more dividend yield, and then they have more story.
The dividend yield.
Yes.
So we haven't talked about this yet. We're gonna get to this in the next couple of weeks.
Yeah.
But again, that means even though you're paying higher on the PVP, at the same time you're gonna earning money. Let's say some companies give you dividend every quarter. Some companies
they're more willing to share their profit.
All right, because they have more profits. Like especially this month, we're seeing a lot of people like start giving that dividend. Some people like who already invested on this one. Again, Telkom just mentioned 80% of their profits is going to be.
I'm very happy with that because I'm one of the shareholders.
All right, I'm not gonna say if I own it or not, but I'm just gonna say today is part of the whole the whole group of Telkom. So,
but if people decide to buy the Milk 2, that is also great decision.
Okay.
So nothing's wrong with the decision as long as you have the reason behind it.
So if we look at the PER and we look at the PVP only. From these 3 companies, which one is the least likely that we should purchase? Should I say Milk 3?
Milk 3,
because it's just the price is already way too high for whatever they're doing. Again, for PER and PVP, you're not looking for the highest number. You're actually looking for the lowest number as much as possible, especially if you compare it back to the same industry, which is on this one, we're talking about dairy goods. And then for Milk 1 and Milk 2, even though on Milk 2, we have a lower number, again, it doesn't tell the whole story.
Yes.
It could be, you can look at other items
There's so
like
many things other
dividend
than
yield
this,
and all the
yes.
other stuff. And then again, historically, we already know this has been around longer, and
Yeah,
you
longer,
can
yes.
find it in any other stores, like
Indeed.
big supermarkets, small supermarket, even
Yes.
in warung, what we call it,
Yes,
like
yes,
stands
indeed.
and everything like that. Right, so all of this, all the PVP, we already talked about the PR and like what happened. Let's go back a little bit about like 50 rupiah. Should people jump in on those stocks that if you already hit the bottom of the price? Can it get any lower?
No, but those kind of companies, they pose higher risk
Okay.
compared to the stocks with normal prices. I mean, there is the rock bottom of the stock price in the market, right?
Okay.
And then if you want to buy those kind of stocks, some people ask, can I put my emergency fund on those 50 rupiah stocks? Because it can go any lower, right?
Yes.
But then we have to see the business. How is the business? Do they still have prospect in the future? Or many times when I see this kind of companies, they struggle in their financials.
Okay.
They have too much debt they have to serve, and there is no story going forward.
So again, look at the book value and see how it's doing, and then see if that 50 actually worth that 50, or that 50 means nothing. It could be like what you mentioned earlier. It could be mean like they have a lot more debt and it can go.
Indeed.
If they go bankrupt, then we can lose our investment completely,
Yes.
just losing it and just hoping they go private instead of going delisted. So again, please be aware that investing in stock involves risk and including the potential loss of your principal. It is important to thoroughly research and understand the company market conditions and other factors before making any investment decision. Consider consulting with a qualified financial advisor or professional for personalized advice based on your specific financial situation and goals. Again, as I mentioned before, you can always reach Mas Dani if you want to have any questions on his Instagram at Dani Rachmat. It's very simple. It's just like his name, not like some other people like me. It's complicated. But with that, we're going to go for a break. Now, after the break, we will have more updates from around the world here on C Morning Show, only on C Today. Stay with us.
Thank you. Thank you.